very strong floor?
See, for me specifically, 2830 holds a very strong support to Reliance and use this as an opportunity to buy. Yes, there are rumors on street that yes, taxation changes can happen and all capital gains, which are now taxed at 10% for LTCG and short-term capital gains at 15% can become normal rate. And this has been one of the reason why markets are taking this rumor and falling. But I feel all this will happen generally before the budget and generally these stocks will come and go and use this as a great opportunity to buy into good stocks. So for me, Nifty is also underperforming compared to Bank Nifty again because of Reliance. And this is an opportunity definitely to buy into good stocks. For example, look at PSU banks. For me, SBI at current levels of around 815, 820 is a great buy. Look at Canara Bank as a good buying opportunity at current level, and you have a lot of good stocks to buy. Use this dip as a good buying opportunity. I am bullish on market, and this dip has to be used as buying opportunity.
Use the dip as a buying opportunity. Let's take that conversation forward. Shibani Sarkar as well joins in on the show right now. Shibani, hi, afternoon. Par for the course, I guess, Shibani. I mean, I don't know what could be the particular reason that one could attribute this kind of a fall in the market to, and a sudden one at that. We seem to be the only standalone case amongst all of our global peers. But that said, you think some more correction and could be a great, buying opportunity?
Yeah, so our markets have performed extremely well in the overall context of the emerging markets. And clearly, from that perspective, India has been a standout. My view is that the ingredients that you've seen which have driven markets so far are still fairly intact. We are in the midst of our earnings season, and so far, what we have seen in terms of corporate earnings delivery has been pretty much in line with expectations, with most of the sectors and stocks that have reported numbers so far, by and large, have been in line with estimates. So after a long period of time, we've seen that over the last few quarters, earnings upgrades and downgrades have been pretty much in a very, very narrow band. So earnings have been steady. Flows continue to be strong, especially on the domestic side, and that is also helping. Of course, when markets outperform in a big way, especially in the context of emerging markets and China, we do expect some degree of volatility. What we continue to believe is that if you look at valuations for the market, specifically the Nifty, while if you look at long-term historic average multiples, current multiples are slightly above history, but it also coincides with earnings growth, which continues to remain strong. So our belief is that large caps, specifically if you look at the Nifty in terms of valuations on a one-year forward earnings basis, valuations are slightly above history, but earnings are supportive and therefore it is not extremely stretched. Within the mid and small cap baskets, one has to be stock specific and look at segments where valuations and earnings are in your favor. If you look at history, clearly mid and small caps continue to trade at multiples which are significantly higher than what average valuations are. So our belief is that from an overall market perspective, earnings, flows, and macro parameters continue to remain fairly in check. And therefore, if you look at some degree of volatility given the past performance, it's something that is part and parcel of markets.
The take coming in on the markets. Yes, earnings have been supportive, but don't you think, Shabani, that most of it is priced in? Because I mean, even if you look at this earnings season, there's hardly been a surprise coming in, barring a couple of names perhaps. If at all, which sectors do you think which might surprise on the upside or are poised for an upgrade from here on?
So absolutely. So if you look at what's happened so far in FY24, earnings estimates mass consumption, whether it be in various categories and segments that you're talking about. These
why they're expecting profitability to go up almost by 13.5% on a sequential basis. Apart from that, if you look at net interest margins, now they're expecting net interest margin to go down almost by 5 bips on a quarter-on-quarter basis, and it may remain somewhere in the range of 3.15%. And apart from that, if you look at advances and deposits, now they're expecting a strong growth there as well. So the advances, they're expecting it to increase